are we in for a change in momentum? Because the mood has already changed.
Yeah, so change in momentum, change in direction, change in trend. I think all three of them combined, that's what we are going through. It's just that on and off over the last 1 month broadly of this correction from 26 September, which started off for the indices. We've been going into phases where the correction is very sharp, intense for a few trading sessions. Then the index remains into a range consolidation. The momentum drops down significantly, even though the direction is on the downside for the index. And in the last 4 days also, I think the first 2 days, for example, of this week, we saw the markets going into a sharp corrective phase. So it's not just the Nifty correction which is hurting the market participants more, but it's the broader market correction where you've seen significant drop in the advance decline ratio. I think that's the bigger concern for the markets. And even the last 2 days post that 2 days of sell-off is we've seen the index still making lower lows, and it's unable to break past even the previous day swing highs, let alone the last 1 week swing high. So that itself indicates that the drift and the direction of the trend is on the downside. Now the levels which we are looking out for, which was the previous major support of 24,750, I think that now acts as a major resistance for the index on the way up. What we are seeing as an observation over the last 3-4 days of this, first couple of days of intense selling, then a drift down lower, is that there has been call writing at much higher levels. So it started off with 24,800, 25,000 as major strikes where you saw call writing. Now the call writing is getting a lot more aggressive towards 24,500, 24,600 strikes for the index, which means we could be looking at the index, maybe even if there's an intraday bounce of 1,800 points, we could be looking at the index still giving into pressure because of the call writers.
Nooresh, hi, good morning. What are you reading on the charts? If we were to slip further and if any uptick is going to get sold into what's looking like the weakest link in the market right now?
So overall, if we look at it, it's purely a single case of FII selling, which has continued the 19 days on a trot. And in the last 2 days, the only observation is the fact that the daily range has reduced. In the previous days, we would see a bounce back in the morning and then a drift lower. In the last 2 sessions, we have not seen much of a range. Yesterday, for majority of the day, we were in a range of say 40-50 points on the Nifty. That's too small a range for an index which is 24,500 points. So out here, we are getting into an absorption phase of the flows. So till the time we don't see a reversal in terms of FII selling, this drift could continue. But at a price point where it becomes interesting is that 24,000, 24,100 mark, which is where the bottom was in July and August, where irrespective of the flows, one could expect a reversal from. So at current levels, you don't want to preempt a reversal. You want to let the markets find its base. So I would be looking out for, say, either you want to be a buyer at 24,000, 24,100 for a trade, or once we start sustaining about 24,750, 24,800, that would confirm a reversal. So for now, we are in the band 400 points on the higher side, 400 points on the lower side is where we find a tradable idea. So for now, wait and watch.
Wait and watch, that's the word coming in as far as the market mood is concerned.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.